Emirates Airlines has reported yet another dismal financial year. The company saw net profits decline by 69% and its annual profit decline by 44%. The company said the results were not as strong as they would have liked. They also saw cash holdings decline due to large investments into the business and a 2 billion dirham dividend paid out last year. The company recently closed out its annual financial year, ending on March 31st. The airline largely blamed the strength of the US dollar for its negative results, saying that the US dollar's strength had an impact of around 572 million dirhams on its bottom line. Emirates also saw its biggest ever fuel bill, increasing 25% from last year, and now currently accounts for 32% of all of Emirates Airlines' operating costs. In other news, despite promising that a deal was close to being done, the US-China trade pact currently hangs in the balance after Donald Trump accused China of breaking the deal, and China said that it would retaliate to any further tariffs placed on the nation that are set to come into effect this Friday. Oil dropped as a result, with plenty of uncertainty in the market from Venezuela to Iran, and markets internationally unsure of the outcome of that US-China trade deal. Described as a very nervous market by one analyst, futures in New York fell 1.1% off the back of Donald Trump's comments on China today. And lastly, the ride-hailing company Uber is expected to price its IPO in the mid-range of its target. Initially, the company had said that it would be aiming for a $100 billion valuation or more, but with its $40 share valuation now, the company is aiming for around $80 billion, it's been reported. The company is expected to go public in the US on Friday, May 10th, and could raise as much as $9 billion from the share sale. That's all from us for today. We'll be back on Sunday with more headlines. Until then, please log on to golfnews.com for the latest news.